Thank you very much. I'm very happy to be here with all of you at this industry event. Glad to be back after 2019 in Amsterdam in this great auditorium. And I will speak today about the passive liquidity protection. And I said it is a market structure journey that we're tackling here to level the playing field. So with that, it's not only the passive liquidity protection, but it's the market structure roadmap of the last years that we have worked on that I'm happy to speak about today and give you some insights into the PLP journey, specifically what has happened in the last 4 or 5 years on that topic. And to round that up, I'm very much looking forward to our panel on market structure developments and the challenges and trends that we see in our market structure. Before I start with PLP, I think it's important to set the stage on the field of market structure and the changes that have been driving Eurex in the last years. So it is a very wild and wide field market structure. It's the mix of participants, it's the functionality, it's infrastructure and technology, and on top of that, also the regulatory framework. And we as an exchange then try to shape the market structure out of this framework, and the market participants define the interaction to be most efficient and most effective behaving in that framework. So you could talk about an ecosystem in that regard that is developed around all of these aspects. And a balanced market structure in that ecosystem is crucial to attract participants, to create an attractive marketplace, and as a result, to be successful with your products and succeed with a good liquidity, making end clients willing to trade your products. Ideally, market structure is established naturally. So we as an exchange sit there, we don't need to do anything and just let people trade, right? Sometimes some external support or protection is required to get there, to achieve that balance. And what is crucial here is that, of course, if we have an idea how to create that balance, to support that balance, we cannot really do that without the participants, right? So we need to align to make sure that the desired effects we have in mind also work well in terms of receiving the respective outcome with participants behaving in that new environment. And one of such initiatives where we try to influence and improve market structure is the passive liquidity protection, short PLP, that many of you might have heard. It is just one approach out of many that we have seen in the industry to cope with latency arbitrage, and there's out there different approaches when it comes to speed bumps. There's differences in distributing private and public market data, and partially there's also some subtle technical methods in differentiating in speed. But our clear target with the passive liquidity protection is and was to level the playing field and allow for a fair and equal speed differentiation. So let me shortly recap on the PLP journey that I've been on with my team over the last years. How did it all start and where do we stand now with this? So when I went out in 2016 and 17 to participants, we asked the question, what can we do to improve market structure, right? So very openly asking, we as an exchange, looking again at that balance, what can we do to improve that balance? Where is it off a little? And while in the futures markets, the outcome was that things work out well and we're somehow happy, we can expand further into new asset classes, whether it's MSCI, whether it's ESG, whether it's factors. There's not a lot we needed to do beyond some tweaking, which sounds small, partially not so small, of tick sizes. But beyond that, the feedback was a very positive one that people were happy to trade our futures markets. When we looked into the options, it was a little more mixed. And here, there was clear potential to improve our markets and to improve specifically liquidity and volumes in our options markets. And when we went out to the participants, we tried to better understand what can we do and what is the root cause of the liquidity not living up to its potential. So when we asked the buy side, they really came with the topic of liquidity and accessibility to trade, and therefore, as a result, also some hesitance to trade more at our exchange. While at the one hand side, we try to work on that from an educational perspective, talking about invisible liquidity and educating also the US clients of the opportunities in the off-book market. The visible liquidity is still crucial and key also for the buy-side clients when it comes to trading in and out and really analyzing and understanding what is immediately available and executable. So how could we improve that? Just forcing market makers to quote higher was, from our perspective, clearly not the solution. So we thought, let's really try to understand how also the world has changed for the market makers. And here, what, of course, all of you have seen is that investments in technology, in infrastructure, has become more competitive and more costly. So being at the edge, providing liquidity as a market maker just got harder over time. So in that regard, a very dynamic environment on the one hand side, but also very challenging for the market makers. And also during that time, the years before, we've seen significant consolidation of market makers. As a result, reducing the mix, reducing diversity, and having impact on the ecosystem. And more precisely, when we looked at that, we saw that the executions against the quote of a market maker have been off balance between the good trades that they get from an end client versus the trades they get from another market maker, mainly driven by having an outdated quote. And this was the element that we wanted to tackle, because fundamentally, the slow market participants have been at a disadvantage from that perspective, and they, as a result, struggled to provide liquidity. So, what was our response? What did we want to do? It was all about tackling the root cause and not working on the symptoms. So like a doctor, we tried to find a mechanism which is a surgery with very minimal interference. So with big impact, minimal interference, while we're addressing this effect with not a lot of undesired side effects. This was a clear target. And we back then went to the market and said, let's present our model where we delay the aggressive order while passive transactions and deletions are immediately processed. The aggressive order is not going to be immediately processed but delayed. So I went out to the participants and thought, there's lots of good solutions out there and we have to find this model. So I thought, okay, let's try and see what was the feedback of participants back then. So you can see not everyone was super happy with us back then. There was a lot of skepticism. There was a lot of negative feedback and concerns that has been brought forward. And I think we need to be clear that we also knew back then that this is quite a big step that we would take. Considering that this was in a time where we had the IEX and the speed bump discussions in the US for futures, for equities, and where we had the Flash Boys book and the general view on HFT was very black and white, the times were challenging to get participants on board and really understand what we want to achieve, why we believe this is the right thing, and how we are mitigating undesired effects, and how we work also with the results that we're expecting, and how transparent we're going to be about it. Independent of these concerns that I think all have been valid over time and super helpful in developing and challenging our solution, we also had a lot of support from members. And I believe in the end, this was a breakthrough to improve our markets And I'll talk about that in a second. What I think was crucial, though, and I very much like this picture to really show that there is skepticism, and there was skepticism, and I had some very unpleasant meetings, which I'm extremely thankful for, because this continuous exchange, especially with members that had concerns, that were challenging us, and that thought that this was not a good idea, really put us in a position where we needed to be really hard on ourselves, checking that this is really the right thing, and also controlling afterwards. And over time, luckily, the very emotional debate also, we were able to include some rational elements into that. So what was key from that perspective? And I think the openness and the communication was absolutely crucial with all market participants, all stakeholders here. And that was early on, from the earliest stages, from the ideas to the pilot phase, and then later on when this also got broader attention with regulators and the media, where we wanted to make sure that we positioned this topic correctly on the one hand side, but that we're also making sure that the understanding and the transparency of this topic is crystal clear to the whole marketplace, and that everyone really understands what we want to achieve and what should be the outcome, and after that also controlling for it. And here, one of my key highlights was, of course, the working committees and the one-to-one sessions that I very much enjoyed. We even were invited to the ESMA back then, to Paris, with some market participants, local regulators, and also academia to discuss the topic. And I think this was a great opportunity back then to also already present the first results in our pilot. And throughout the whole discussion, which now takes around 4 years, it was always about taking the concern serious on the one hand side and be transparent about the data and sharing that. And not only talking about the data afterwards, but also talk about the data before you implement something. And I have to be very honest, I believe this is really crucial if you want to create a marketplace and run a market where you create trust. Yeah? So this is how we should run a market. I think there's very good examples in the outside world. For example, if you look at the vaccine development in the COVID crisis, how people were working with data and sharing data and being very open about it, how things can be very transparent and how you can communicate very openly, taking away emotional concerns and addressing them with facts and data. So KPIs, and I think I'm going to be challenged on them during the panel, which I'm very much looking forward to, are crucial, and it's also crucial to talk about them up front. So for me, it's already a long journey with PLP, starting in the equity options with the pilot, comparing that against other equity options, then going into the index space with the DAX, and later on the whole index space, and yesterday also the Eurostoxx option, which I'm very happy about. So starting very early, now 4 years later, from a pilot phase, we're into full implementation mode in the PLP in our options markets. And I can only confirm that it has been a very intense interaction throughout the whole time with market participants, regulators, and other stakeholders on the topic. And I'm very happy that we're in calmer waters now, and not because I rather have a less stressful job, that's not the point, but rather because the concerns and the undesired effects did not materialize. So luckily, the convictions we had worked out, and the data confirmed that the liquidity improved. So Eurostoxx was the last step. We're climbing the mountain, we're achieving our target, but it's not over yet, right? So we further need to continue and monitor the success and the results. And this is also something which we're going to be very transparent about and speak about again. So also that is an element which is part of our DNA, and we talked about DNA this morning, that the data should also really be the point which is driving our decisions. And this is something which has worked very well in that specific case. So while this chapter is closed, there's further challenges ahead, right? There's a focus to the US, to Asia, to South America on the one hand side. We have a re-emerging trend of off-book trading, and on top of that, there's new trading venues competing with us. And the regulation is also not necessarily making trading more easy. But of course, we're on the path to further tackle those challenges as well. So zooming in again, while there's further challenges for the European patient that we need to work on, we believe we found a cure to that very specific problem, and that with PLP, we have been able to ensure that we're leveling the playing field. And with that, thank you very much for your attention, and I'm looking forward to the discussion at the panel.